Oh, look, there were moments of doubt. Back in 2013 when I bought on the run up to $1,000 and it crashed to 500, I did doubt it and I sold it all. But over time, as you understand the underlying asset, the technology, what's happening, you grow immune to it, to be honest. It's ironic that the internet has created digital abundance, but has also facilitated the ultimate scarce commodity in Bitcoin. And when you step back, you cannot kill Bitcoin. You will never print more than 21 million of it, so you can't stop it. It's truly finite. It's unlike anything else we've ever seen as humanity. In contrast, over the last 50 years since the US defaulted on its gold standard obligations, the number of US dollars in circulation have gone up 66 times.
Welcome to a new episode of Bitcoin Equities Talks. Today with Daniel Roberts, the CEO of Iris Energy. Can you please present yourself, Daniel, and your company?
Hi, Jad. Pleasure to be here. Dan Roberts, co-founder, co-CEO of Iris Energy.
Yeah, so what brought you to Bitcoin and Bitcoin mining, Daniel? Tell us a little bit about your background and how you got there, and then perhaps about Iris Energy.
Yeah, sure. Well, I think the Bitcoin and the Bitcoin mining backgrounds are different stories. Bitcoin, it's coming up to a decade now as I look at the date, which sounds impressive, but it wasn't the most glorious start. I first bought Bitcoin on the run up to $1,000, late 2013, 2014, and then sold it all when it went back to $500. Just sort of nonsense, silly magic internet money. How wrong I was. And then Bitcoin mining was really a product of, I guess, going down the Bitcoin rabbit hole, so to speak, in 2017, reading a lot of monetary history, and then realizing that Bitcoin mining was a very natural overlap with, I guess, my professional background and that of my brother and co-founder, Will.
So what's your professional background?
So I started life at PwC, then worked at Macquarie, the Australian investment bank, across Sydney and London, developing infrastructure and renewable energy projects. And then about 11, 12 years ago, jumped out of Macquarie to help set up an infrastructure funds management business where we basically took pension fund, insurance fund money and bought long-dated, unlisted infrastructure assets. So ports, airports, wind farms, solar farms, pipelines, etc. Look, it was right place, right time. We grew that to around $6 billion in assets under management. And then about 5 years ago, I sold out and set up Iris Energy with my brother Will, as I mentioned earlier.
Okay, so I have a good infrastructure background and a good financial background. What's your approach to Bitcoin mining compared to others? Because I believe you're Australian, but you're operating in the US. So how come you moved so far away and what took you there? Tell us a little bit about the whole story behind it.
Yeah, sure. I guess opportunity sometimes shapes strategy. The reality is it's much easier to do business in the areas that we're active in North America than it has been in Australia. We're looking. But we have 3 projects in British Columbia, Canada, and one very large site in Texas in the US. I think our approach to mining has been very focused on the long term and on that infrastructure approach. So when we came into the sector, we saw 2 things that were changing. One, the longevity of the hardware chips was stretching out. Technology gains were slowing down. The manufacturers at that point were approaching the efficiency of traditional computing chips as defined by the bandwidth the gate width on the transistors. As we know, they've now caught traditional computing, competing with the likes of Google, Amazon, etc., to get 5 and now 3 nanometer wafers. So for us, the competitive advantage in the sector was changing and was moving more to an institutional capital and infrastructure model where instead of being able to front run the market with the latest technology, as was the case for many years, the battleground was more likely to be fought on who could access institutional capital and build out large-scale infrastructure-like businesses. So we don't do CCANs, we don't do shipping containers, we don't do old abandoned warehouses. We build proprietary data centers from the ground floor. We've designed them from first principles for power-dense computing. It's creating optionality in the platform more broadly, but that was the approach that we saw Bitcoin mining.
Actually, you raised an interesting point about institutional investors. How did you manage to raise money from institutional investors early on when, I mean, still today, it's very hard for Bitcoin players and the whole space in general. Ourselves in our ETF, we buy Bitcoin listed companies and we struggle to find so many of them because I feel like there's a lack of money in the space. How did you manage to find money for magic internet money?
Look, I think over the last couple of years, it's definitely been more challenging. A lot of that institutional capital has dried up. But as you say, we were able to raise several $100 million of institutional capital in the lead up to and including the IPO, which JP Morgan, Citi, and Canaccord led about 2 years ago. Look, I think our backgrounds probably helped. I think the team in aggregate has delivered over $25 billion of infrastructure projects globally. So from a credibility perspective, relationships, we were in a good position where a lot of the team did have experience in raising capital and importantly deploying it properly. But undoubtedly over the last couple of years, I think we IPO'd at the absolute peak of Bitcoin in the last cycle. So it's nice to see it ticking back up as it is now, but it's been, as Bitcoin does, it's normally a couple of years, 2-3 years of downward trajectory and then has a year and a half of fun. And perhaps we're on the cusp of that.
Yeah, you mentioned the Bitcoin price variations. And don't you find it quite extreme for a CEO like you to manage a business with an underlying that is so volatile? If you look at all the other businesses, if you look at even the commodity business, they have like prices swinging, but not as much and not so often, I would say. So, how do you, as a CEO or co CEO, manage all these price variations and your business adjustments accordingly?
Look, if you expect things to happen because you've seen it before and you understand what's happening with the underlying, then you can plan for it. If I and we had attempted to begin Iris Energy 10 years ago when we first invested in Bitcoin, it would have been a very different experience. But by the time we founded by the time we founded Iris, we're not Satoshi. Yeah, we'd seen multiple Bitcoin cycles. We'd seen it go on these parabolic 10 to 30x runs, draw down, a fraction or a large proportion of those multiples that have gone up. And we understand the volatility. We understand the market and human behavior that drives a lot of those hype cycles. So I think, when we saw the last one, we knew that it would peak at some point. Did we expect it at 65,000? No. Did we expect it to bottom out in 15,000? No. But when you understand that the asset is capable of something like that, you just structure your business accordingly. So for us, it's always been about the lens of asymmetric risk. Make sure that every business decision you make, you can quantify the downside and isolate it. Never expose yourself to existential risk and basically buy yourself a series of cheap call options, individual projects, hardware purchases, capital structure, and make sure that you retain as much exposure to the exponential upside that we understand comes with this commodity, but ensure that we can live and survive extreme drawdowns when they will inevitably occur.
Yeah, I mean, speaking of drawdowns, last year, 2022, was a really bad year for Bitcoin miners, and we saw a couple of them go bust. And so if Bitcoin price goes down, I hope not, but if it goes down, how do you manage to have to continue paying your cost? How did you manage in 2022 to survive the whole bear cycle when others couldn't?
Look, I think there's a couple of elements. One is ensure that you've got a low cost operations. Our focus on 100% renewable energy since inception has held us in good stead. We know that marginal cost renewables is basically the cheapest power you can get. There's no input, there's no commodity cost into that. So that's certainly helped. We don't do hosting, we own everything. So there's no additional margins going out to third parties. And then when we did take on a level of financing, we did it in a way where it was limited recourse. So it was asset financing rather than corporate finance. And the key difference is that the security net is limited to a specific group of assets rather than being at a corporate level where if you're unable to pay those debts, it means existential risk for the whole group. So we're in a good position now. Our last reported number was $64 million of US of cash in the bank and no debt, and looking like a very low cost producer going into the halving next April.
Interesting that you mentioned asset-backed financing. I believe from your infrastructure background, you must have seen a lot of asset-backed financing deals. Last time I checked, when it came to Bitcoin mining assets, the financing rates were like very, very expensive. How do you see them compared to other infrastructure financing rates?
Very, very expensive, but it's all about sources and uses of funds. We aren't taking on 10 to 12% interest rates in this sector to invest in regulated airports and gas pipelines delivering a 12% return. If you look historically, when you buy these chips, they deliver a 1 to 125% annualized cash on cash return at the point of purchase. So if you're spending 12% as your interest rate to buy an asset that's earning over 100% based on the spot return metrics at that point in time, that sounds pretty accretive from a shareholder's perspective.
Yeah, but as an asset, the one financing you, he has the other view, basically. He's not getting the upside. And his downside can spiral down quite quickly because you have, if Bitcoin price falls, then the asset price falls, and therefore it becomes a bit tricky for him. I suppose that's why you have these high interest rates compared to a gas pipeline where you're just getting a PPA in place and everything financed and you cash flow known in advance, right?
Exactly. We weren't the ones lending. We were happy to borrow.
Okay. So that's about volatility. Then you mentioned renewables and you mentioned the sites where you're mining in Canada and in Texas. What brought you to these sites and what made them attractive compared to other sites?
Yeah, so we said from day one that not only will we utilize 100% renewable energy, we will only target energy markets where the introduction of our energy consumption can solve problems and actually deliver positive externalities into local communities and energy markets. So in British Columbia, they've got an oversupply of hydro. They're still commissioning large-scale generation in the north of the province, Site C Dam. But since they made that initial investment decision as the government, you've seen decline of industry like many Western markets. The pulp and paper industry has really fallen off a cliff. The issue in a market like BC, where it is a regulated power market, is someone still needs to pay for all the infrastructure and the electrons. So if you have fewer people using that power, then they need to pay more. So you enter what is often termed as the regulatory death spiral, where if you're being asked to amortize the cost of the infrastructure and generation base across a discrete number of people, and you keep raising power prices because the number of people shrink, then that's going to force more energy users out of the cost curve and so on, that negative downward spiral. So for us, we were able to come into these regional towns that have been decimated by the closure of the mills, rehire a number of the local workers, retrain them, often co-locate near or adjacent to the old paper mills, leverage a lot of their electrical infrastructure, and then finally connect to the BC hydro network and pay a market rate for our electricity, delivering a substantial alternate revenue line to BC Hydro, thereby plugging a potential hole. So that was BC. Texas is probably your more typical renewable energy story, where there's an oversupply of wind and solar. So up in the Panhandle region, where our Childress site is located, there's something like 32 gigawatts of wind and solar projects. The transmission line, 12 gigawatts to export the load down to Dallas, Houston, etc. So you have periods of enormous oversupply of renewables. And as you know, one of the advantages of Bitcoin mining is that it's manufacturing at a nanometer scale with enormous flexibility. So we can throttle our machines off and on very quickly, and it's all done algorithmically and via software to basically take power when it's cheap and sell our power back into the market when it's not.
Okay, interesting. And what do you do with the Bitcoins mined? Do you hold them or do you sell them?
No, look, we think the best return strategy for shareholders is to sell them. There's a couple of reasons. One, I would rather redeploy that capital, either distribute it out to investors or reinvest it in additional compounding strategies. I mean, if you take a Bitcoin on balance sheet, it's a static asset. It's not going to grow in Bitcoin denominated terms. You reinvest that in mining machines that deliver those 125% annualized yields, then all of a sudden you're reinvesting for the future and compounding those returns. I also don't feel like it's our job to be charging, as management team, investors to hold Bitcoin on their behalf. That's not our expertise. That's not where we're adding value. With these ETFs likely to be approved in the near future, it'll be really interesting to see if miners continue the broader strategy of holding coins. Yes, it's nice as management to sit on a big buffer and know that you're sitting on a big stockpile of cash and Bitcoin, but we don't believe that's the optimal return strategy for investors. And another point is, where would we hold them? The sector is littered with bad experiences around custody and where you hold the coins. Imagine if we were to lose them because we gave it to a custodian that, was like one of the many that have gone under over the last cycle. So again, I think if people want Bitcoin, they should consider buying it themselves and put it into cold storage where they're not exposed unnecessarily to risk.
Okay, wow. That's quite unique in the space. I mean, across all Bitcoin miners I have interviewed so far, you're the first one that is just selling everything. Which makes me ask you the question, what's the difference from an investor's perspective, holding Bitcoin versus holding Iris Energy?
Oh, look, undoubtedly there is a correlation, right? When 100% of our earnings line today, and that may change quickly in the future, but 100% today is linked to the price of Bitcoin. Bitcoin is a emerging monetary asset. We can think of it as gold 2.0. Gold parity alone is what, $600,000 a coin. So there's lots of compelling reasons to buy Bitcoin and bottom draw it. From a business perspective, what we're doing is building large scale power dense data centers, which are mining Bitcoin today. That delivers a yield, an operational income, an operational return. It requires building up a real asset base of land, power infrastructure, data centers, computers, people, and expertise. It's a very different exposure to Bitcoin, but undoubtedly correlated.
Yeah, but that was not my question. Meaning, like that, I have the strong conviction, and I believe you do, that Bitcoin is the best investment asset class out there. And therefore, why would an investor buy your equities if he has like just such a competitive asset that has performed, that is going to continue performing over time, whilst a company can perform maybe yes, maybe no, and how can you? So basically, your challenge is to overperform Bitcoin, so it makes it more competitive. So you attract investors going there.
Well, why do people buy gold miners instead of just buying gold? Why do people buy copper miners instead of just buying copper? Why do people buy upstream suppliers in supply chains to NVIDIA GPUs rather than just buying NVIDIA stock directly? I think that's what makes capital markets, different steps along the value chain, different investor preferences, differences in risk returns. That's a personal choice that every investor makes with their entire portfolio construction. It's not for me to say that one investment, whether it's buying copper futures, is better than buying a copper miner. I think that's up to personal preferences and where people wish to allocate risk and whether they want operational risk, commodity risk, etc.
Okay. Again, from an investor's perspective, how would you answer Warren Buffett claim that Bitcoin is rat poison squared, and therefore what you're essentially doing is mining rat poison?
Well, look, I thought it was magic internet money 10 years ago. I think a number of people dismissed Bitcoin initially only to see it continue to survive, continue to accrue long-term value, and at some point actually invest the time to understand what it is, where it sits vis-a-vis monetary history. And different people have different layers of understanding and need to understand different things to justify an investment. I can't talk for Warren Buffett and what he might or might not think about Bitcoin, but I think it's fair to say that there are a number of people who have really enjoyed the current fiat system of money. For 50 years, there's been a way to make money where the number of units in circulation printed, and there's a way to utilize that to derive returns. So to ask people like that to flip it all on its head and acknowledge the last 50 years of fiat currency is actually an anomaly in human history, in the sense that it is transient by definition. In over thousands of years, we've been through this cycle time and time again. To try and step back and acknowledge that is really difficult. And I was the same. You're in a professional career, you're working hard, you've got family, etc. For someone to tell you, hang on, have a look at this Bitcoin thing, think about it as a monetary asset, it's very easy to dismiss. No, US dollars are money. Go away.
Yeah, but still you have a lot of very smart people and some also very smart bankers, central bankers, etc., that are very well respected by the public that have the same claims. And at the end, from your perspective as a CEO of a listed Bitcoin miner, you must wake up some days and say, what am I doing here? Maybe I'm like getting all this wrong, and especially in the bear markets and all the stuff that happens around the space. What's your like moments of doubts, and what do you do when they happen?
Oh, look, there were moments of doubt. Back in 2013 when I bought on the run up to $1,000 and it crashed to 500, I did doubt it and I sold it all. But over time, as you understand the underlying asset, the technology, what's happening, you grow immune to it, to be honest. It's ironic that the internet has created digital abundance, but has also facilitated the ultimate scarce commodity in Bitcoin. And when you step back, you cannot kill Bitcoin. You will never print more than 21 million of it. So you can't stop it. It's truly finite. It's unlike anything else we've ever seen as humanity. In contrast, over the last 50 years since the US defaulted on its gold standard obligations, the number of US dollars in circulation have gone up 66 times. 66 times. And we're sitting here with Bitcoin as only ever having 21 million. I know where I'd rather save. So when you put it through that lens, it does feel like, if you can zoom out, it ironically does feel like a safer investment. And I think Larry Fink of BlackRock said that during the week, that he sees the drive towards Bitcoin as a flight to quality amongst all this geopolitical angst. And I think that's the irony of the whole Bitcoin dynamic, where it is viewed by the broader world as a risk-on asset. But the paradox is it's the ultimate risk-off asset. You do not need to trust anyone else. You will always have the share of the network that you buy. If that's 1 divided by 21 million, you will always be able to transfer that value to someone else, and no one will ever be able to stop you. And that is very, very unique when you look at almost any other asset on the planet.
Yeah, I totally agree. But I find like this rhetoric have been like in place for almost 5 years now, or maybe a little bit less, 4 at least. But they haven't seen a lot of real life stepping in to places where I can pay with Bitcoin, like application that enhances or improves the whole user experience. Apart from Bitcoin mining, do you think about like adding some other businesses to your core business to build on Bitcoin and do other stuff? One example I was struggling with is the Bitcoin wallet, basically, and the Lightning wallets. There are some out there, but this technology is so powerful, but I don't see any Google or PayPal or big player, big money stepping in and building like the ultimate Lightning wallets and so many like things to build on Bitcoin, not just about okay, it's a very good monetary assets, blah blah blah. It's more like okay, now let's build real businesses. So you've built one successful and real business. Have you ever thought about building other businesses?
Nope. It's not our competitive advantage. There are other people that are way better suited to doing that. Products, services, different layers on top of Bitcoin, people with different backgrounds, different expertise. I wish them all the best. And as an advocate of the Bitcoin ecosystem and what it stands for, I hope they succeed. But what we are good at is building, owning, and operating power-dense data centers, and that's where our focus will be for the near term.
Okay, so you're focusing on your core expertise. And what about your the price? Do you have any price prediction? How do you see Bitcoin going, and what's your views about it for the next years?
Oh, look, it's very hard to put specific prices out there. I think a price that will likely take a bit of the public mind share over the next few years is gold parity at $600,000 a coin. The whole notion, like, it's a really good analog, right? What gives gold value? Its store of value characteristics, its monetary characteristics. And we all know gold failed as money. It was too heavy, too hard to transfer, too hard to divide, which is why we gave it to governments, banks, churches. Historically, they issued pieces of paper, and the temptation to print too many pieces of paper over time, human nature, had happened, debase the currency, reset, start again. So Bitcoin solves that. It is better that being gold than gold is. It's scarcer, it's more durable, it's easier to transfer, it's easier to divide. So as gold 2.0, why wouldn't it eventually catch gold in a world where all these other digital social networks are disrupting their physical equivalents? You look at Netflix and Blockbuster. You look at bookstores and Amazon, as the genesis of Amazon was. All these digital social networks, Facebook's another one, they eat market share. We're 5% of the market cap of gold as Bitcoin today. Think back when Netflix was 5% the market cap of Blockbuster. It's clearly a better product, but it just takes time. And no doubt, there were lots of smart people at that point in time, Jad, saying, people will never want to download or stream a video live time. They will want the experience of going to the local store and hiring a video, right? With Gold 2.0, that's gone from Ascent 12 years ago to $500 billion, $600 billion of value today, and we're still speculating on whether it's going to make it or not. I think the horse has bolted.
Yeah, I love your comparison with Amazon. It's the one I always use. I bought Amazon at IPO price, and then it went up to 90 or something, and then it dropped, and I sold it. I said, yeah, no, people are going to prefer the user experience of going to a bookstore. And I kept on seeing it going back up again and biting my fingers. So now when I discovered Bitcoin, I said I'm going to hold it forever, whatever happens, whatever news flow there is, because it's just that simple and that strong as a value proposition. Thanks a lot, Daniel, for joining this chat. I'm going to wrap it up here. For those listening, I strongly recommend following Daniel on LinkedIn. He doesn't post often, but I really love his posts. So please continue doing them and keep us informed about the whole space.
Thanks, Jad. Thanks for having me.
Take care.